Welcome back to Fried Green Lettuce. I'm going to give a little bit of education on this one. So we're going to start with stocks. So if you've ever wondered what stocks are, how you can make or lose money on them, how they handle the world, how they shape the world, that's what we're going to talk about right now. So stick around. By the end of this video, you'll have a pretty good understanding of how the stock market works with some real world examples. So let's get into it. So what are stocks? A stock represents ownership of a company. When you buy a share of the company stock, you're essentially buying a small piece of that company. This makes you a shareholder. Companies issue stocks to raise money for growth, like expanding operations, launching new product, or paying off debt. When they succeed, shareholders often benefit through increased stock prices and profits. So there's really two types of stocks. There's common stock. Most people invest in common stock. It's the one that comes with voting rights, meaning you can participate in key company decisions, like electing board members. It also offers potential dividends and capital gains. The other kind is preferred stock. Preferred stockholders usually don't get voting rights, but they usually have other advantages. They'll receive a fixed dividend and are prioritized for payouts. If the company faces financial trouble, they receive their money first. So here's an example, like Apple. So if you own a tiny portion of Apple's operations, including its iconic products like the iPhone, the MacBook, that they're still around, right? Apple Watches, Apple earns revenue and expands globally. Your stock might increase in value. Apple's stock has seen incredible growth over the last few years, but it wasn't always great. In the early 2000s, the company struggled and almost went bankrupt. And then it bounced back with the iPod, the iPhone revolution. Early investors who believed in Apple, they actually were handsomely rewarded. You know what? Now, how do you make money from stocks? So there are two primary ways to make money from stocks: capital gains and dividends. So capital gains occur when you buy a stock at one price and sell it at a higher price. For example, if you bought Tesla stock at 50 and sold it at 100, you'd make $50 profit per share. It's like flipping a house, but with a share of a company. However, capital gains aren't guaranteed. Stocks can lose money based on company performance, investor sentiment. They even trade based on rumors. But obviously economic factors like we had today with the Fed announcement, that could move the market too, but it didn't do too much. So let's take Meta platforms, formerly Facebook, for example. When Meta missed earnings and expectations 4 years ago in 2022, the stock price fell by more than 20% in a single day. Investors who panicked and sold that stock in the drop locked in their losses. However, long-term investors who held and saw the stock recover in the following months got some gains. So this highlights an important lesson. Patience is key when investing in stocks. So now, what's the other one? Dividends. Some companies, especially those in stable industries like utilities or consumer goods, they pay regular dividends to shareholders. Think of dividends as a thank you note from the company for your investment. For example, Coca-Cola has been paying dividends for over the last 50 years. Let's say you own 100 shares of Coca-Cola, which pays a 1.76 annual dividend per share. That's $176 in passive income each year just for holding the stock. Over time, reinvesting those dividends can significantly grow your wealth. On the other hand, some high growth companies like Amazon or Tesla choose not to pay dividends, instead reinvesting their products to expand faster. So how do you lose money? While making money sounds great, the risk of losing money is very real. Stock prices can be volatile, influenced by various factors like company performance, global events, investor psychology, and once again, rumors. And if somebody on TV says something bad, there's been a bunch of lawsuits that actually have affected them. If you're following the Walgreens booth, it went up and went down, and I've been following it back and forth. And they're supposed to get bought out, so it goes up and then it goes down. So let's look at some real world examples. So Amazon's journey is obviously legendary. Founded by Jeff Bezos in 1994, Amazon began as an online bookstore. Its stock price was just a few dollars per share when it went public. Fast forward to 2021, and Amazon stock reached over $3,000 per share. Early investors saw life-changing returns, obviously. However, Amazon's growth wasn't linear. The stock experienced major drops during the dot-com bubble burst and other market downturns. Investors who trusted Amazon with a long-term potential, they held on and ultimately reaped massive rewards. Now let's talk about Enron. Everyone's familiar with Enron. On the flip side, we have Enron. In the late 1990s, Enron was seen as a star in the energy sector. Its stock price skyrocketed, and the company reported impressive growth. However, Enron was hiding massive debt throughout fraudulent accounting. When the scandal broke in 2001, Enron stock collapsed from over $90 per share to virtually nothing. Investors lost billions. This cautionary tale shows the importance of researching companies before investing. Stock market basics. Stocks that are traded on exchanges like the New York Stock Exchange, NASDAQ. These markets connect buyers and sellers, allowing prices to fluctuate based upon supply and demand. Several factors influence stock prices, including company performance. Strong earnings reports can boost stock price. Economic conditions. Factors like interest rates, inflation, GDP growth, etc. News and events. Major events like elections, wars, pandemics, those cause rapid price changes. Tips for beginners. If you're new to investing, here are some tips to follow that I like as fried green lettuce. Start small. Invest only what you could afford to lose. Diversify. Spread out your investments across multiple industries. Research. Understand the companies you're investing in. Think long term. The stock market can be volatile, but time is your ally. Warren Buffett often advises investors to stay the course, emphasizing that patience pays off. I'm going to give you a quick conclusion. To recap, stocks represent ownership of a company. You may make money through capital gains and dividends, but there are the risks of losing money too. By diversifying, doing your research, and thinking long term, you can navigate the stock market with confidence. Thanks for watching Fried Green Lettuce. If you found this helpful, please give a thumbs up and subscribe. Let us know in your comments, what stocks should we buy? Be part of our journey right now. All right. Thank you. Bye.